ImpactVC is a community of VCs coming together to accelerate and learn about the topic of impact in venture capital. And we started it, incubated it within Better Society Capital, where we've been investing in impactful venture funds for more than 10 years now, based on a series of learnings from that experience and observations within the ecosystem. So we saw 3 things we really liked and 2 things that were missing. So the 3 things we really liked were, firstly, the impact potential of technology become increasingly clear in terms of the difference it can make for people and planet. Secondly, increasing momentum around this topic of impact in venture capital, as people increasingly think about the difference they can make with their funds and for their LPs and for their constituents. And then thirdly, the fact that we think this trend is going to stick around for a long period of time in what somebody much smarter than me has called the decade of purpose, because people increasingly want to work, save, and invest in line with their values. And that creates competitive advantages for impact companies in sectors like health, education, financial inclusion, and parts of climate investing. So that's all the good stuff. So why did we start ImpactVC? Well, to build on that momentum, but also address 2 gaps that we saw in the ecosystem. One being around connectivity between VCs working on this impact problem, where there were folks who'd worked in it for 20 years and folks who are working on it for day one, and actually putting those folks in touch so that they could compare notes and figure out what that path could look like. But also connectivity across borders, where people who've been working on it for a while might have spoken mostly to folks within their own ecosystem already. So we wanted to create that connectivity. And the second gap was around resources for doing impact really well in practice. So there was a lot written down around impact that was really academic, or for different asset classes or for much bigger companies, but there wasn't a lot that was there for early stage venture investing. And so with this community that we built, we wanted to create and co-develop tools and resources. So what have we done in that vein? Well, there are now more than 800 people from more than 600 VCs globally. About 90% of that group is in Europe, coming together online and in person, asking questions, engaging together, and exploring what impact they can have. And with that group, we've built a playbook around impact for VCs, for founders, and a training program and coaching program off the back of that, so that people can really make a difference in their day-to-day life and work as a VC. So in impact investing more broadly, folks are investing in all sorts of different asset classes and capital's reaching all sorts of different business models. So in parts of impact investing, I think it's absolutely true that there's a trade-off between financial returns and impact. But in parts, there also isn't a trade-off. And we think venture is one of the areas where there isn't a trade-off, because there are business models there that can win from an impact perspective in terms of how they engage acquiring and retaining customers, acquiring and retaining talent, talking to regulators, unlocking different investment capital, by having that impact piece right at the heart of how they build their business, how they're identifying and solving problems and building on that feedback data in a really rich and engaging way. And we think those dynamics are true in areas like health, mental health, financial inclusion, education, elements of the future of work. And one way of thinking about our investment program at Better Society Capital is a big experiment to find the areas where that's true. And we think there are emerging areas where that is true. So to your question around evidence, it's still somewhat emergent. A lot of the returns in our portfolio are unrealized, and in early stage funds we've been backing over the last 10, 12 years, but really mostly in the last 5, 6 years. So there's some caveats around this, but what we're seeing so far suggests that impact companies perform at least as well as all other types of company, more broadly from a financial perspective as well. So we think that's pretty encouraging, that you can have that kind of return and that kind of impact together in this area. Yeah, absolutely. I think it's an interesting area to get stuck into for investors. And I think there's a lot of reasons why investors should think about investing for impact, but not easy to get started. So a few areas that folks wanting to do this from the investment standpoint can start. Well, one is all investments have an impact, whether it's positive or negative. So start with understanding the sorts of impact you're having already. And that doesn't need to be a huge academic exercise. It can just be looking at your portfolio and saying, look, I think this is making a positive difference. I think this probably isn't making much of a difference. I think this might actually be negative in some cases. Looking at that profile and understanding whether that aligns with where you want it to be. I think that's the first thing I do. Second thing is using that potentially as an input, but also thinking about how you want to show up in the world. What does impact mean for you? Because impact's not a binary thing where it is or it isn't impact. There's lots of different kinds of impact in terms of the problems you're solving, who you're reaching, the sort of complexity of how you're doing that. So think about what impact is for you. And to give a sense of what that might look like, For us at Better Society Capital, that's about addressing social issues and inequalities, particularly reaching vulnerable, underserved and disadvantaged groups. So we think a lot about affordability and accessibility in areas like health, financial inclusion and education. So working out what for you is the crisp version of the impact you're after can really help as a selection lens, as a sourcing lens, and how you communicate with others in the market. And the third thing I'd say is find some people you can talk to who've done it before, which is partly why we set up ImpactVC, so that you can have that conversation with hundreds of other VCs and VC investors around how they went through that journey and what they did practically.